Let me share my screen. And one of the things I definitely want to show you guys is this discussion board. In case you run into problems during the weekend, there's other classmates out there that are working on the same type of issues you guys are working on. So in the discussions link, that's what I hit. I'm in the discussions link now. There's this general question student forum, ask your classmates. You can go in there. And just as an example, I put a couple questions in here, like a couple of you needed help posting a picture to your profile. So I set a little video up. But you can come in here and you can click reply and you can ask your classmates something. So you would just come in here and you would put in something like, I don't understand why assets are increased. What's a transaction where assets would be increased? And you guys, classmates, can answer yourselves back. So in order to reply to those, you probably want to subscribe. There's this button over here that pictures might be covering right now, but there's a subscribe button. Mine's green. It means that I'm subscribed and I'll be notified if somebody posts a question in here. If all of us subscribe to that, then we can help answer each other's question. Right? This is a village. It takes a team to help out a village. And so I would encourage you guys to post questions to your classmates. And if you struggle with something, you might want to put on homework question number 2, I'm not sure how to record transaction A. Can someone help me? Then somebody else can come in and say, oh, transaction A included a increase to cash and a decrease to accounts receivable, for example. So I would encourage you to use that as an option. The other option, remember in the modules link, in the introductory module, you'll have access to my virtual office hours. I don't have them on the weekends, but I will Zoom with anyone that needs to. And Giselle's contact information is here. So reach out for help. I hate hearing that, I didn't want to disturb you. Or the thing I really hate is when I get emails that say, sorry to bother you. That's my job. You're not bothering me. I'm here to help you guys. And that includes weekends. I'm not on my email 24 hours a day by any stretch, but I do check it often and I'm more than willing to help you guys out. So keep that in mind because we have a really difficult chapter today. So our schedule, I hope this is in the front of your notebook. So today we're starting chapter 3. I believe chapter 3 will be the most difficult chapter for us so far. And the other important thing is chapter 3 builds on chapter 2. So if you haven't started the homework, if you haven't practiced a little bit, you're probably going to be lost today. So this weekend, let's use it as a catch-up time to finish chapter 2 because it is due, I think it's due Monday, if I'm not mistaken. Here's the due date for chapter 2. And then let's do at least half of chapter 3 this weekend, because remember, you guys have a test coming up shortly on Wednesday. So I would like you to really crank out some homework this weekend so that you can get assistance if you need it next week and prepare adequately for that test. Now, the other email I did get this morning, I sent out an email to the people that had not yet posted on the discussion board. And she said, I don't see a due date for Thursday. Well, here's the due date. Your discussion post is due tonight, 5/27. There's 2 parts to discussions. There's the initial post that you make that is always due on Thursday night. And then there's the reply to 2 classmates that's due on Sunday night. The reason she's not seeing this due date is because Canvas lets me put in 1 due date. That's why you guys have this schedule. So if you haven't input these dates yet into your phone or your calendar or whatever other device that helps you keep track of your time, let's go ahead and take care of that now. I don't want you guys missing out on any points. So any questions on what's ahead? While I have the schedule up here, I probably don't have to remind you, but Monday is a holiday, so we will not be Zooming on Monday. Hopefully you can take some time to remember those who have served to serve our country. Remember those that have served to create the freedoms that we have today. Okay, so today, chapter 3, the most difficult chapter so far, but again, pivotal to your success in this course. So today we're going to transition from using columns to using T accounts. So in chapter 2, we've had columns set up for each one of the assets, the liabilities, the equity, the revenues, and expenses, and we've been recording things under columns. Well, columns get pretty messy, and if you think about even a small business, you'd have probably 50 to 100 columns, and so it doesn't it's not very conducive to being neat and organized. So for learning purposes today, we are going to learn about T accounts. And a T account, I hope you read the chapter. So last time we talked about coming prepared to class, and I gave you guys some notes on what coming prepared to class means. So hopefully you've at least scanned chapter 3. Maybe you didn't spend an hour highlighting it and doing an outline, but you should have read through it. We're going to talk about what a debit and credit is. If you've read the chapter, then you'll be hearing these terms for the second or third time rather than just walking in cold and having no idea what I'm talking about because you haven't previewed the chapter yet. So if you haven't, I'm not going to sit there and discipline you or anything, but I am going to say going forward, the chapters will be much easier and the lectures will be much more meaningful to you if you will take the time to preview the chapter prior to coming to class. So today we're going to talk about what a T account is. We're going to talk about two things called debits and credits that many people are confused about because some of the exposure, the only exposure they've had, is to their banks, where banks do debits and credits backwards. So we want to talk about what a debit and credit means in the accounting language of business. We're going to learn 5 rules for debits and credits that are going to carry us to the end of the semester. We're going to use them every single day in every single chapter, not just in this class, but in all the accounting classes you take. Double entry accounting is focused around these concepts of debits and credits that we're going to talk about. We'll then talk about what normal balances are. And I would encourage you guys, as we are learning about accounts, to keep a running list of all the accounts that we learn about. And as you keep that running list, you'll see an exercise today where I'm going to ask you 3 things about every account. And often there's quite a few questions on the test that will also ask you those 3 things. So I'll circle back to this when we do our second exercise today, where we practice what a normal balance is. We're going to spend a lot of time today practicing using debits and credits as soon as we learn more about what they are. We'll then total or summarize them. Summarize should be a key word for you because it's one of the functions that we do in the process of accounting. And then hopefully we'll have time to end up talking about we'll take our first stab at something called the trial balance. Okay, so just know going in that chapter 3 can be confusing. It's confusing when you read it, so I'm hoping that you've read it. And now when you walk into the lecture and you listen to me explain it and we practice it a little bit, that light bulb, it may not come on full force, but it'll start to flicker up there in our brain as to how to use debits and credits. So that's where we're headed. Again, the reason I provide agendas, a lot of students think it's kind of weird that I provide agendas. I'm a business person, so I like to know exactly what I intend to cover today. And then you as students should go back and look at this before your test and ask yourself, do I know what a T account is? Do I know what the definition of a debit is and what a credit is? Do I know those 5 rules? I know she's going to ask me them if she took the time to write it on the agenda. I know she's going to ask them of me on the test. Do I know what a normal balance is? And if the answer to any of those is no, that should be a little warning to you that you need to go study that section for the test. Giselle's heard me say this a million times, but we tend to study the things that we already know because it makes us feel good when we know the answers, but we should be doing exactly the opposite for a test. We should be honing in on the things that we're weak on. How do you hone in on the things that you're weak on? you look and you make notations about what you miss on homework, what you miss on quizzes, and Learn Smart will keep taking you back to questions if you miss it. If you keep seeing the same question answered or asked in a different way, write that topic down. It means that you haven't mastered that yet. So this is where we're headed. Any questions on where we're going? Okay, then everything I'm showing you is in chapter 2. I'm sorry, in the modules link. It looks like I have the wrong handout up here. I actually need the one for chapter 3. So let me go to the modules link. Let me grab the chapter 3 handout, not the chapter 2 handout. That's my mistake. And we'll give it a second to load. There we go. Make it bigger. And what I do on these handouts is I try and take a look back first, and then we look forward. And my goal is to take the chapter that's probably 20 or 30 pages long and just summarize it in one easy to understand place to serve as a test review. Okay, so it says the purpose of this handout is to summarize some key concepts that will be used repeatedly. And you already know what those are from my agenda. We're going to look at T accounts. We're going to look at 5 rules of debits and credits. But this chapter in perspective is really only an expansion of everything that we've done so far. So just to kind of recap, we've analyzed transactions. I hope we all know what the definition of a transaction is by now, because I've mentioned it probably 5 or 6 times. It's a financial event which changes the resources of a firm. And so hopefully you've taken the time to practice some of the homework. Maybe you haven't finished it, although I did see, I think 10 people had already finished, but hopefully you've at least started it. And we've gone through these mental mechanics. We've asked ourselves what accounts are being affected. We decide whether we want to increase or decrease that account. And then we record the transaction under the proper caption or under the proper column. And after every one, as Ian reminded us during class, we always have to remember that the debits equal the credits. Or sorry, you don't know about debits and credits yet. That the left-hand side equaled the right-hand side every single time. We'll learn about debits and credits in a second. Columnar headings can be messy and they're inefficient. So we're going to take the next step in learning about accounting, which is T accounts. And T accounts are going to replace the columns. So let's talk about why they call it a T account. So what I'm going to do is go to today's Excel files that hopefully you've downloaded by now. And I'm just going to go to the last tab. If you don't know how to add a new worksheet, it's this little plus sign right at the bottom of the Excel spreadsheet. You can actually add a column. And I'm going to show you what a T is. A T gets its name because it looks like a T. So I'm going to make one T account here by using the lines function in Excel. You can see me creating a line going across and a line going down. And I told you that there were 5 rules of debits and credits. So once I have that first T drawn, I'm going to copy it over 5 times so we can talk about these. Okay, so there's my first T. I'm going to hit the copy icon up here in the left-hand corner, and I'm going to go paste this. And I'm going to do that 5 times so we can talk about these rules. Paste, 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 and one more paste. Okay, you can also just write T's down on a piece of paper. So a T account gets its name because it looks like a T. And what we're going to do is instead of using columns, we're now going to use T's. And so for every column that you had, you're now going to have a T account. Well, we're going to learn 5 rules, and we're going to use these rules throughout the semester. So the first rule we're going to learn is regarding the assets. So all assets would have its own T. You would have a T for cash. You'd have a T for equipment. Any asset you can think of is going to have its own T. And once we have a T, we're going to learn what the rule to increase and decrease the account is. So let's get some other definitions out of the way that we're going to be using with this T. We're going to learn that the word debit equals left. It just means left. It does not mean to increase or decrease. Debit means left-hand side. So I'm going to write that at the top. Debit equals left-hand side. And credit then will equal the right-hand side. And you might be saying, well, what the heck does that do for us? Well, for every type of account, we know 5. We know that there's assets, liabilities, and equity. And we know that under the equity umbrella, there's also revenues and expenses. So here is the 5 types of accounts that we've learned about in class. We're now going to learn a rule for each one of these different types of accounts. So for every single one of these accounts, debit means left and credit means right. Don't ask me why they abbreviate debit with DR. I think it is a Greek word, but that's how they abbreviate. For every single account, debit means left and credit means right. Doesn't matter what kind of an account it is. Debit means left and credit means right. So I'm going to write that all the way across. And you guys have notes of these in another handout. I want you to get in the habit of writing these down with me and learning these. I use a visual cue to remember these. So for all assets are going to be increased with debits and decreased with credits. Okay, what the heck does that mean? It means any asset that we use, whether it's cash, accounts receivable, equipment, any of those assets that we talked about last time, if we want to increase the asset, we're going to put an amount on the debit side. And if we want to decrease the asset, we're going to put the amount on the credit side. Okay, now remember, this is an equation. So I'm going to put a line up here to remind us that at all times, the assets need to equal the liabilities plus the equity plus the revenues minus the expenses. So why did I put that yellow line? Because for the other side, for anything on the right-hand side of this equation, the rules are going to be opposite. Okay, debit still means left and credit still means right, but these pluses and minuses are going to switch over. So liabilities is the opposite rule of assets, which means it's going to look like this. Minus plus, and equities to the right of the equal sign, it's going to be minus plus. And revenues is on the right-hand side of that sign. It's going to be minus plus. And then you get out to this oddball. Remember that this oddball is the only one, the only account that we've learned that is subtracted out on this equity side of the equation. So what that means is the opposite, right? Since it's the oddball, it's the only one that's subtracted out. Expenses could really be moved over to the other side mathematically. So this is the only thing on this side of the equation that looks like the assets. Okay, now is that easy? No, it's confusing. It's going to take some practice. There's another rule now that we're using debits and credits. Before in chapter 2, again, back to Ian's great question that he had right before class started, the left-hand side of the equation always has to equal the right-hand side of the equation. That holds true all the time. When we use debits and credits, there's another rule that's going to hold true. The debits have to equal the credits on every single transaction. There will never be an exception to that rule. Remember, we're using double entry accounting, which means that at a minimum, 2 accounts are going to be used. And once we record that transaction down, then we have to ensure that the debits equal the credit. So that's the last thing I'm going to put up here. Always, always, always check to make sure the debits equal the credits. Okay, well, that's a lot of stuff. It's a lot of pluses and minuses going every which way. So we're going to get our hands dirty and we're going to go and do a warm-up exercise. It's our very first tab that helps us make this mental transition from using columns to using these 5 rules of T accounts. So let me stop for a second. Before I do that warm-up exercise, does anybody have any questions? So what I want you to do right now, if I don't hear any questions, if I do, just interrupt me. Just unmute yourself and interrupt me. But if you guys don't have any questions, here's the way that I remember this. I tell myself that I have to remember what assets look like, right? So the key to this for me is I got to remember what assets look like. So how do I do that? I make a card, right? You heard me talk about index cards last time when I'm studying for a class. On one side of the card, I would write assets. And on the other side of the card, this is the T account, I would write plus minus. Then what my brain knows is that everything else on the other side of the equation is exactly the opposite, right? Except for the expenses because of that minus sign. Minus means opposite, usually in math. So this is the opposite. This follows the assets. So if I remember that assets and expenses are plus minus, then by default, everything else is going to be flipped. That's how I remember it. So we're going to practice that. But before I move on, I do want to share a little acronym that my students discovered last semester. I don't use it. My job or I remember visually, just like you saw. But there are quite a few students that like this little acronym here. And here's what the student said. And again, doesn't matter to me how you remember these, you just have to find a way to remember. So here's what the students came up with. I think they saw a video on it. They remember the word dealer. Okay, so again, this may or may not work for you. I'll throw it out there and you can decide how you want to learn it. And they put a line in the middle of dealer. And here's the way they remember: debit, expenses and assets, and then the other half for them means credit, the rest. Credit, liabilities, equity, and revenues. So I don't know if that works for you. Some people like to make a game out of it. This was something that a lot of the students I found last semester helped them. So they write out the word dealer and they split it in half, and they remember debits for expenses and assets, right? That makes them go up. And everything else, liabilities, equity, and revenues, get credited for the increases. So I'll totally leave that up to you as to whether that's something that you find useful or not. We're going to go back and do a warm-up exercise and make that transition from columns to these 5 rules of debits and credits. Before I leave this screen though, debit means left and credit means right. That's all it means. It doesn't mean increase or decrease. Debits means left, credit means right. And then we're using some visual cues to help us remember how accounts are increased and decreased. So assets, my visual cue is plus minus. Assets are increased with debits and decreased with credits. Everything else on the right-hand side is flipped. So if it's on the other side of the equation, it's minus plus, which means liabilities go up with credits and they go down with debits. And that holds true for equity and revenues until you get out to the oddball expenses. That follows assets. Okay, it's not easy. If you work at a bank, put the rules of debits and credits out of your head from the bank, because banks do things backwards. There's a reason for that. Our cash that's sitting over there, That's liabilities to the bank. They owe it back to us. So when they use debits and credits, they're speaking from another side of accounting. Questions on just those 5 visual cues. Okay, let's go practice. So the first tab is called warm-up exercises. And what we're going to do is we're going to record these things in columns like we've been doing in chapter 2, and then we'll transition over to these T accounts off to the right to give us some practice. And by the way, you will not pick this up like this. This will be something that you might start to pick up if you've read the chapter after we've done a couple, but most likely it's going to be kind of fuzzy during today. And once you go home and practice on the homework, that light's going to come on. So first one, this is how all of our transactions start off. Before I start that first one, does anybody have any questions? Okay, and Giselle, you're keeping an eye on that chat room because I lose it. Number 1, the owner invested 50,000. Okay, we know that invest is a key word. And whenever we see the word invest, we use the capital account. Okay, well, what else happened? This is the company's cash account went up by 50,000. So when we were doing this in chapter 2, cash went up by 50,000 and capital went up by 50,000. Okay, so how are we going to transition that over to T accounts? Okay, well, each account has its own T. So I'm going to come over here to these 2 T accounts, and I'm going to write cash on one and capital on the other. And then my teacher just told me that debit always means left and credit always means right. So I'm going to get into the habit of writing that down every time. And then here comes the hard part. Can you remember the rule? I would put in pluses and minuses every single time until you learn these. So cash is an asset. It's going to look like this. And capital is on the other side of the equation. It's an equity account, so it's going to look the opposite. So here's the rules. And now comes the moment of truth. Put the 50,000 on the correct side. Okay, well, cash is an asset. The way we increase assets is with a debit. So I'm going to put the 50,000 on the debit side here. And then capital is an equity account. The way that you increase an equity account is with a credit. I'm going to put the 50,000 on the credit side. And then I'm going to check every single time to make sure that the debits equals the credits. You can't have an account, a transaction that has 2 debits and no credits. That'll never work. Because remember, after every transaction, we're going to check that the debits equal the credits every single time. That's a fundamental rule in accounting. The debits have to equal the credits every single time. So as we're learning and as you're doing your homework, take that extra second to make sure that the debits equal the credits. So we did that transaction in columnar format first. And now we're transitioning over to a new concept called T accounts. T accounts get their names because they look like a T. Each account has its own T and its own set of rules. Cash falls under the asset category, and the rule for all assets is plus and minus. Capital falls on the other side of the equation, and you may want to write that equation up here. I tell students, when you're taking a test, as soon as you get into that test, I would get a piece of scratch paper, and you can show the camera that you have blank scratch paper, and I would write this equation down. I would write down assets equals liabilities plus equity, and underneath that equity umbrella, I have capital, revenues, and expenses. And you might take a moment to write. I have accounting 102 students and higher. I teach another class someplace else, much more difficult than this class. They still write T accounts down. Assets will always look like this. And everything else on the other side of the equation, except for expenses, will be the opposite, minus plus. And expenses is the odd man out because of that minus sign. It looks like this. It's okay to write that out. I would write it down every single time I do my homework until the rules start to stick, and then they'll become second nature to you. So we're making this transition in this warm-up exercise. Any questions on that first one? All right, second one. The company purchased copying equipment for $20,000 on account. There's those trigger words. I think Brandy used that word. On account. Okay, we need to decide, is that money that's due to us, called accounts receivable, or is that money due to other people, creditors, and use accounts payable? Well, we're buying stuff. That means we owe somebody else $20,000. So two accounts, identify the two accounts, equipment and accounts payable. Those are my two accounts. Go ahead and put the amounts in. Cash, no cash, it said it's on account. So equipment's going up by $20,000, and that means our debt just went up by $20,000. When we're using columns, we always make sure that the left-hand side equals the right-hand side every single time. Well, now we're transitioning over to these new things called T accounts. So I need to write those two accounts down. The two accounts we used was equipment and accounts payable. So the first thing I'm going to do is write those two accounts down. Because I'm learning, I want to remember that debit equals left and credit equals right, no matter what account we're talking about. And here's the moment of truth, the hardest part. Can you remember the rule? Is it a plus minus, or is it a minus plus? Well, equipment is an asset. Here's the rule for all of our assets. I'm visually staring at it. So I'm going to write the rule in. It's plus minus. And then accounts payable is on the other side over here, on the other side of the equal sign. It's going to be the opposite, minus plus. And so now can I put the amount on the proper side? Well, we bought equipment and we went into debt. Since the company's getting equipment, equipment goes up with a debit. And because we just went into debt, we need to increase our liabilities. And the way we increase liabilities is with a credit. And after we're done, we make sure that the debits equal the credits every single time. So we bought equipment on account. Our equipment went up and our debt went up. Any questions on that? Okay, let's try another one then. Number 3, the company performed copying services. So this is a printing company. They're performing their copying services for $10,000 on account. There's those words again, on account. This time we're the ones doing the work. So we are owed the money. Our customers owe us the money. And so we learned that that is an asset account called accounts receivable. I'm going to abbreviate it so it fits. And I'm going to have that go up because we didn't get any cash. Remember what GAAP says, you record revenues when earned. They've performed the copying service. They've earned the revenue. So accounts receivable went up and the revenues went up by $10,000. We made sure in a columnar format that the left-hand side equaled the right-hand side every single time. So now what we're going to do on the T accounts is we're going to create a T for each account. This is accounts receivable. And instead of using the generic term revenues, we want to use specific types of revenue accounts from here on out. And the revenue account that your author uses in this chapter is fees income. So I'm going to call that fees income. which is a revenue type of account, but I want to give it an account name. Okay, second, debit means left, credit means right. So I'm going to put that in because I'm learning, and the more I write this, the more I'm going to make that hand-to-brain connection. And then comes the hard part. Can you remember the rule? Accounts receivable is an asset. All assets are plus minus. And fees income is a revenue. It's on the other side of the equal sign. It's the opposite. It's minus plus. This is called double entry accounting. And so accounts receivable went up. It increased by 10,000 because our customers owe us money. And our revenue account, called fees income, went up because we performed our copying services, and GAAP says you record revenues when earned. And then the last step, make sure that your debits equal your credits every single time. Okay, let's go see what number 4 says. Any questions on 1 through 3? Let me stop. Any questions on 1 through number 3? All right, number 4, the company got its electrical bill and paid it. So they get an Edison bill in the mail and they pay it. Okay, well, the word paid means we know cash is going to go down. So I'm going to come over here to cash and I'm going to put minus 1,500 because my cash is going down. And then utilities is a cost of doing business, which is the definition of an expense. So that utilities expense would go up. But the reason that's okay is because don't forget, expenses are subtracted out. So we still have our left-hand side equaling our right-hand side. So let's go put those accounts in here. Right now, it doesn't matter what account you put first. It will start to matter in the next chapter. So I'm going to go ahead and put cash as one account and utilities expense as the other account. I'm going to, because I'm learning, debit on the left, credit on the right. And then I'm going to put my rules down. Assets always look like this, plus minus. And here's what will be the most missed on the test. Utilities, even though they're on the other side of the equation, they look like assets because of that minus sign that happens in the equation. So these have the same rule, plus or minus, going back to that dealer, DE, debit expenses, right? Going back to that dealer analogy. And so let's get our numbers on the correct side. Their cash went down because they paid a bill. Cash goes down with a credit. And their expense went up because they incurred a cost of doing business. Expenses can only go one way, which is up. And we make sure that our debits equal our credits each and every time. And then the last one on this demo problem, the one that is, again, missed by a lot of students. So I'm going to highlight it. We learned this in chapter 2 that a lot of people miss this one. The company collected 4,000 of the amounts owed to them by credit customers. Okay, well, credit customers are sitting up here in accounts receivable. Those are people that owed us money. And now they're paying part of it. They're paying us 4,000. So in a columnar format, our accounts receivable would go down by 4,000 and our cash would go up by 4,000. Ian, this is one of those questions that you asked me about at the start of class. It's okay not to touch the right-hand side of the equation as long as these two over here net to 0. Okay, and he was asking about that homework question that has increases and decreases. So let's record it. Go put an account for each T. Cash is one, and accounts receivable is the other. These are both assets, and so they both have the same rule. So let me get my debit on the left, credit on the right. And they both have the same rule. So let me get my plus minus on both of these. And now I got to get it on the proper side. I need to go look at my columns again. Cash went up by 4,000, and the way you increase cash is with a debit. And accounts receivable went down by the same amount, and the way that you decrease the amount that's owed to you on an asset account is with a credit. That's making the transition from these columns to these learning tools that we're learning about in chapter 3 called debits and credits. T accounts are great learning tools for helping us understand how double entry accounting works. You guys must have questions after that. Okay, that's probably enough so that you need a little bit of a mental break. So kind of for fun, kind of because we need a mental break, let me show you a quick little video. I think it's 3 minutes long on debits and credits. I hesitated to show this to you because after I use it, I have the dumb song stuck in my head for the entire day. So I hope that doesn't happen, but it probably will. So let me start this. It's just kind of a fun video. It will help you remember what debit and credit means. Oops, sorry. Let me get the captions going.
Yo, you wanna be an accountant? Think it over, it ain't easy. You might need a boarded clover. If you ain't willing to work hard, then can it? It's the most sought after job on this planet. Now, you tell me you wanna be an impartial judge of my solvency. Now, you tell me you wanna protect the world from corporate fraudulency. Now, all that sounds like fun, son. But you gotta walk before you can run. To know what these numbers mean, you gotta know the debit credit theory. Debit on the left, credit on the right, debit left, credit right, debit left, credit right.
That's what you guys look like.
Balance all of your transactions. Debit on the left, credit on the right, debit left, credit right, debit left, credit right. For complete satisfaction, balance all of your transactions. Balance all of your transactions. So, if you really wanna know about your cash flow, where your money go, then give in to the temptation. Understand the fundamental accounting equation. An asset increasing is a debit, an asset decreasing is a credit. The reverse is true for liabilities and equity. If you get this, then you get accountancy. Debit on the left, credit on the right, debit left, credit right, debit left, credit right. For complete satisfaction, balance all of your transactions. Debit on the left, credit on the right, debit left, credit right, debit left, credit right. For complete satisfaction, balance all of your transactions. Gotta work your way up to controller. You ain't born a high roller. Gotta work your way up to controller. You ain't born a high roller. Gotta work your way up to controller. You ain't born a high roller. Gotta work your way up to controller. Debit on the left, credit on the right, debit left, credit right, debit left, credit right. For complete satisfaction, balance all of your transactions. Debit on the left, credit on the right, debit left, credit right, debit left, credit right. For complete satisfaction, balance all of your transactions. Debit on the left, credit on the right, debit left, credit right, debit left, credit right. For complete satisfaction, balance all of your transactions. Debit on the left, credit on the right, debit left, credit right, debit left, credit right.
Okay, again, just something fun to help you remember what debit means. If you don't remember what debit means after seeing that, I don't think I can help you. Any questions on what we went over? Okay, then let's see how much of that you absorbed. So I'm going to do these with you. Then we'll talk about what a normal balance means, and then we'll give you guys a chance to try these on your own. So this says, Hayden Fry decided to start a dental practice. The first 5 transactions for the business follow. for each transaction, we go through these mental mechanics. The same thing we did in chapter 2. Decide which two accounts are affected. We're going to set up T's with the proper rules, and then we'll enter the debit and credit columns on the appropriate side. I'm using separate T accounts for each one of these because we're still in the learning stages. So that first one, the owner invested $90,000 cash. Okay, we should be pretty comfortable with that transaction by now. It's the way that all businesses start off. So which two accounts are affected? Cash and capital. Okay, so I'm going to put my T accounts up there. I'm going to write down the word debit and credit because I'm still learning. Debit means left, credit means right, like that silly song kept drilling into our head. The hardest part, can you get the rule? Can you get the pluses and minuses going the proper way? Cash is an asset. All assets are plus minus. Capital's on the other side of the equation, so it's going to be the opposite of an asset. It's going to be minus plus. And now can we get that 90,000 on the appropriate side? The business's cash is going up, so I'll debit that. And the owner's capital is going up. And the way that you increase a capital account is with a credit. And then you make sure after every transaction that the debits equal the credits. Okay, next one. Paid $30,000 in cash for equipment. Okay, the two accounts are equipment and cash, or you could put cash and equipment. Okay, that would be okay also. These are both assets, so they're both going to have the same rule. Debit still means left, credit still means right. Let me get my rule in there because we're learning. So the rule for all assets is plus minus. So I got my rule down there. Now we got to do which side do we put it on? Well, our equipment went up. The way you increase an asset is with a debit. And because we paid cash for the equipment, our cash went down. And the way we make an asset go down is with a credit. And then we ensure that after every transaction, our debits equal our credits. Okay, number 3, we perform services for cash amounting to $9,000. Okay, well, identify the two accounts. That would be cash and some type of a revenue account. Your book uses fees income. So there's my two accounts. Put the rules in. Debit means left and credit means right. So I'm going to put those in so I get that into my head before test day. And then the hardest part, I think, get the rule in. The rule for all assets is plus minus. And for everything else on the other side of the equation, including revenue accounts, it's minus plus. My cash went up by $9,000. And my revenue account called fees income also went up because I performed a good or service or sold a good or service. Every single time, check out that the equality is there. Make sure your debits equal to the credits. After you do these, after you spend an hour doing homework, it will slowly start to make sense to you. And you need to practice it repetitively, not the night before the test. You'll get overwhelmed. But set out a couple hours, a few days a week to work on this and really practice it. Questions on 1 through 3. Okay, number 4, paid cash for advertising expense. Okay, again, doesn't matter which one you list first. I'll use cash and then advertising expense. Let me get the rule in. I know that debit means left and credit means right. So I'm going to get those down until I have this stored in my brain. I know that all assets are plus minus, and then it's the other side that people miss. Expenses is on the right-hand side of the equation, but because they have that minus sign in front of it, it could really be moved over. And so it looks the same as assets. That is the biggest problem I'll see. People get expenses backwards. And so my cash went down because I was paying money out, and my expense went up, which expenses can only go up. You won't see any credits to expenses. They can only go up, right? When I make a rent payment each month, the rent just keeps getting debited every single month. And then the last one, unless you guys have a question, make sure the debits equal the credits every single time.
I have a question.
Sure.
For number 2.
Yes.
Why, I think you've already mentioned this, but you have equipment first, then cash, equipment on the left and cash on the right. But for like number 1 and number 4, you have cash on the left and everything else on the right. Does that matter? Is that okay?
Yes. So right now, Brandy, the order in which you list the accounts don't matter. I could have put cash over here first. So it doesn't matter as long as you have the 2 accounts right. It will start mattering in chapter 4. They're going to tell us that from here on out in chapter 4, they want the debits listed first. Okay. But for right now, for our learning purposes, as long as you get the 2 accounts right, you're going to be good if you can put the number on the appropriate side. Hope that answered it.
Yes, thank you.
You're welcome. Okay, the last one then. Great question from Brandy. You guys are probably also wondering that. Paid cash for supplies. Okay, so again, doesn't matter right now if you put cash in supplies or supplies in cash. Going back to Brandy's question, that's not important. What matters is that you put the number on the appropriate side. So these are both assets. They're going to have the same rule. So let me get my plus and minus down there, because that's the hardest part of this chapter, is remembering those 5 rules. Since these are both assets, it's going to be plus minus and plus minus. Let me get that in there. And then here's what matters, Brandy. It's not which one you list first. It's where you place that 3,000. So cash is going down. The way to decrease an asset is by crediting it or putting the number on the right-hand side. And supplies is going up. We just bought an asset. It has value to it. So the way we increase an asset is with a debit. And then we ensure that we have a matching debit and credit. The debits have to equal the credits every single time. And to go back to Brandy's question, it would be just as correct if I moved this number over to the other side. In other words, if I decided that I wanted to list supplies first, this would be just as appropriate as what I just did. So the order doesn't matter. It's the side you put the number on that matters. Any questions? Okay, then I want to teach you one more thing before we jump into combining numbers. And remember this was one of the items on our agenda, the term normal balance. So I want to address what a normal balance is. And then I augmented this problem. You'll see how in a second. It says indicate whether each of the following accounts has a normal debit or credit balance. That's what this question asked you. Because I know what's coming on the test and I know what kind of questions I put on every test I give you, I augmented this to include 3 things. And this is what I was kind of trying to push you guys towards doing. Every single account that we learn in here, I would start a notebook in the back of my notebook. I would start listing each account, because as we learn more and more material, you're going to go from maybe having 10 accounts in your vocabulary to maybe having 90 accounts in your vocabulary. And if you make a list like this and you keep adding to it, you're going to have a really excellent study tool to help you study for exams. So let me define normal balance. Normal balance is the side that receives the plus. It would be the balance that you expect an account to have. So what I remember in my brain is just 3 words. It's the plus side. Okay, and this will become really important in the next chapter. When we start having numbers going every which way and we compute balances, it's always good to know what a normal balance is. Okay, well, think back to the T accounts that we just learned. Cash is an asset account. So if I'm looking at the rules for all asset accounts look like this. So when it asks you which side receives the plus, that answer is a debit balance. Okay, cash has a normal debit balance. I know that's contrary to banking. That's why I want you to put banking out of your head. But for accountants, for people that are tracking their finances, all assets have debit balances. Okay, the type of account, this is where I'm augmenting it. I asked you 2 additional questions because I know what's on the test. The type of the account is one of those 5 types we learned yesterday. It's either an asset, or it's a liability, or it's an equity, or it's a revenue, or it's an expense. Those are your choices. Let me make that column bigger so you can see those choices. Well, cash definitely is an asset. Let me put that in the middle so you can see it. And then which financial statement? We learned 3 yesterday. I hope you've had a chance to practice. The 3 statements were the income statement, which just has revenues and expense. The statement of owner's equity, which shows how the capital changes. And the balance sheet that proves the accounting equation is in balance. Well, cash is an asset, and all assets go on the balance sheet. So I'm going to put BS for balance sheet. And I'm going to make that centered also. Okay, so this would be a really good question to go back and look at before the test, because I guarantee you there's going to be multiple choice questions in there that ask you things about the normal balance, what kind of an account it is, and what financial statement it falls on. Okay, so capital. Think about capital. It's on the right-hand side of the accounting equation. It's going to be the opposite. So if I'm just remembering how the equation works, it looks like this. So the normal balance is the side that receives the plus. It's a credit. Capital is an equity account. And I'm going to make this a different color. Capital is the only account that falls on 2 financial statements. It shows up on the statement of owner's equity because that's what the statement of owner's equity does. And it's also, the ending balance is carried over to the balance sheet. It's the only account that shows up on 2 financial statements. So again, we're building on what we learned yesterday. Okay, fees, income. That's go ahead. Question?
Quick question. So with that, since there's 2 for capital on a test, would we put both or one or the other, or how would that work?
So it'll probably be worded something like capital would show up on which financial statement, and A would say income statement, B would say statement of owner's equity, C would say balance sheet, and D might say something like both B and C are correct, that kind of thing, or E, none of the above. So you would have to pick the one that is most correct. It's a good question. And I think you'll see that on the Learn Smarts when you do it. You'll see similarly worded questions. Good question.
Thank you.
Yeah, fees income is a revenue. Okay, so if you need to write it down, because we're still learning, revenues are on the right-hand side of the equation. They look like minus plus. So looking at that visually, All revenues have a credit balance. Whoops, I was in the wrong column when I typed that. Give me 1 second. Revenues have a credit balance. We already said it is a revenue account. And revenues and expenses go on the income statement. They are the only things that go on the income statement. Accounts payable is a liability account. Liability accounts are on the other side of the equation, so they are the opposite of assets. So visually looking, they have a credit balance. We already mentioned it is a liability. And liabilities go on the balance sheet. Remember, the balance sheet is the one that shows us that the assets equal the liabilities and equity. All right, these next 3, 5, 6, and 7 are all assets. Okay, so I'm going to make one big T account for 5, 6, and 7. There's the rule for assets, supplies, equipment, and accounts receivable are all assets. Let me make them a different color so they stand out. We can do all of them at the same time. They all have debits because they're assets. They all are assets, so let me put the A in there. And all assets go on the balance sheet. And then the last one, the expenses, those are the ones that people get a little bit fouled up on. Expenses are on the right-hand side of the accounting equation, but because they're the only one that make that equity umbrella come down, or they have a minus sign in front of it, they look just like the assets. So the normal balance of an expense, any expense, is a debit. It is an expense. And all expenses as well as revenues go on the income statement. So that's a really good model on how I would build a test review sheet. And in each chapter, we'll learn a few more accounts. I would keep adding to that in the back of my notebook. And I'll give you guys a little hint. I shouldn't tell you this, but I will. I hate final exams. I absolutely hate final exams. Even though your final's not cumulative, I hate the pressure that final exams bring. So on your final, not on any other test, but on your final, I am going to allow you to use notes to take some of the pressure off. I'll tell you more about my experience with finals later. But knowing that when final time comes around and you'll be able to use your notes, I would keep a running notebook and I would go back and I would take notes on each chapter. That'll make it much easier for you when you're studying for these tests as they get more difficult. Can't use notes on the first 3 exams because these are foundational. We need to drill these into our head. We can't have you running back and looking at notes. They'll be proctored and you will not be able to use notes. But on that final exam, that one, you might as well start building a good study guide. And by the way, everything that we're doing in here carries over to Accounting 101 that I hope you'll all take in the fall. So this will also be a good study guide to start you off on the right foot when you start Accounting 101. All right, questions on anything about debits and credits? Okay, then I want you guys to try these 8 transactions. I'm going to be quiet for, I'll probably set my timer for maybe 5 minutes or so. Let's have you write down the proper debits and credits. I'll start you off with the first one, and then I'm going to give you a little bit of time and you can check. If you miss it, I want that big red pen or highlighter pen or something circling. I want you to, we're going to kind of test yourselves right now. So I'll do the first one. It says a firm purchased equipment for cash. So I would put equipment and cash on my T's. I know that debit equals left and credit equals right. And I know that the rules, these are both asset accounts. Get your rule in there. So I'm going to get my rule in there. And then the harder part, where does that 32,000 go? Which side? Well, equipment's going up, and the way we increase an asset is with a debit, and cash is going down, and the way that we decrease an asset is with a credit. And as Brandy just mentioned, if you switch the T accounts, that's okay. Doesn't have to be in any kind of specific order right now. We just need to make sure that equipment got the debit and cash got the credit. So I'm going to mute myself and I'm going to be quiet. Let's see if you can do the rest of these, and I'll put the answer up shortly. Okay, the timer went off for 5 minutes and scared me half to death. You probably saw me jump, but let's check and see how well you did. Now, if you missed these, I want you to write down a note to yourself with a red pen, a highlighter, something, so you'll know that you need to go back and study that one. Okay, so here is my solution. It doesn't matter what order the accounts are in, as long as you have the amount on the correct side. So there's the first 4. And here's the last 4. And I can show them to you again if that went too fast. How'd we do?
Can you show number 2 again, please?
Yes. Let me scroll back up and show you the first 4. And whoever asked me, I think that might have been, I wasn't sure if that was Ian, but number 2 uses a new account that you may not have read about. Drawing. I'm glad you asked that. Drawing is a contra equity. So I need to bring that up. Drawing is our first contra account. And drawing is what we call a contra equity. It means contrary to the normal balance. And equity is our very first contra account, contra equity. And so it will always have a debit balance. You'll never credit the drawing account. It'll always be debited. So that's another good one to list in our chart of accounts. In fact, I may go back and enter that one at the bottom because it's kind of a strange account.
It's considered an expense, right?
No, but tell me how to say your name, please.
It's honore.
Honore. Honore, that's a really good question because so many students think it's an expense. It's not an expense because it's not a business-related cost. The owner's simply taking out funds for his or her personal use. So it's a contra equity. It's actually a reduction to equity.
Okay, and then since it's a reduction, then that's why you're doing the opposite of the, what do you call it? Equation for equity.
Yes. Contra equity, contra means opposite to or contrary to. So if you guys are going to keep that list that I suggested, I'm going to go add drawing to it because it is heavily missed on the test. So that was exercise 3-3 where we were working on that exercise. I'm going to add drawing to that, and then I'll go back and show you that answer if you need it. Because all companies with one owner have some type of a drawing set up so that the owner can feed his or her family. So drawing, it has a normal debit balance because it's a contra equity. And a lot of people think that it's an expense. It's not an expense. It has nothing to do with the business. That's funds that are being used to fund the owner's personal life. And that would go on the statement of owner's equity because drawing pulls down the owner's net worth. Money that comes in goes to capital. Money that comes out goes to drawing. Let me go back to the solutions, to the one we were just looking at. Did everybody have a chance to check them?
Can we check the last 3?
Yes. There you go. There's the last 4. And I would say that if you miss 1 or 2, you're right where you should be. If you missed half of them, it just means that you have to practice some more. If you missed 1 or 2, you're right where you should be. We're just learning. We're gonna make mistakes. Any questions on that? So you'll notice that we've been using single T accounts. Well, there's going to come a time where we need to combine the numbers. So for the last part of our class, we're going to go to probably the toughest homework problem in this chapter. Let's take a look at problem 3-4B. It's our next one over. And I gave you guys the entire problem on this tab. And then I gave you T accounts, big T accounts for us to use. So I want to point out a couple of things as we read through this. And I can't hold your attention. I can't keep you guys going for another hour or so. So we're going to do part of this problem, enough to show you how to combine T accounts. So let's read. It says the accounts and transactions of Brian Carter, counselor and attorney at law, are as follows. And they give us here, this is called a chart of accounts. That should be a word that's in your vocabulary. They described what a chart of accounts is in chapter 3. It was one of the terms. And a chart of accounts is a list of all the accounts that a company uses. And there's actually a numbering system that we'll probably talk more about next time. Right now, I just want you to know that here's our accounts. We don't want you getting creative quite yet. So you have to be limited to these accounts to use. And then they give us a bunch of transactions and they tell us to identify each entry and to post them into the T accounts. Okay, well, I made us a set of T accounts on the next page. And to keep me from having to go back and forth right before class started, I snipped about half of the transactions and put them at the top so that you guys could see them while we were working. So now we don't have individual T accounts for every transaction. Now we're going to be using these, I'll call them corporate or group T accounts, where we're going to learn how to track the balances when we're done. Okay, so our job is to put each one of these transactions in these T accounts, and then we'll talk about footing the T account. In other words, how much cash do I have? Pretty important question, because I don't want to go to the grocery store if I don't have enough cash, you know, to cover myself. If I use my debit card, and again, debits and credits are backwards on banking accounts. But if I use cash, or if I write a check at the grocery store, I want to make sure I have enough cash in my account. So we're going to learn how to track the balances here on this one. So first one, letter A, unless you guys have any questions. Letter A says Brian Carter, he was the owner, invested $150,000 in cash to start the business. This is that first transaction on how all businesses work. So before we record any of these, if I were you guys, I would go write the rules down at least in the first line of accounts. So what do I mean by that? I mean, before this even started, I would come over here and put debit on the left and credit on the right for each one of these. I used to teach my kids debits and credits in driving. They absolutely hated it. They wouldn't get lefts and rights on directions. So they would get debits and credits. So debits on the left, credits on the right. So all the way across, I'm going to put in debits and credits. Here's the more important part. Can you guys remember the rule? I don't care how you remember it. It's totally up to you. Some students like this dealer thing that we talked about at the start of class. And what that stands for is debit, expenses, and assets. So if that's the way you want to remember it, you can do that. So assets and expenses are the only ones, whoops, that look like this. And everything else by default is minus plus. So I would get those rules down there first. That will help you as you're doing your homework. As soon as I got ready to take a test and I had my blank piece of paper out for scratch paper, I would write this at the top of my test paper. And I'm not talking just for this test. I'm talking about to this day when I take tests. I'll put that accounting equation up because I always need to make sure that my accounting equation's in balance. So once you write those rules there, then we can start dropping the transactions in. So Brian Carter invested 150,000 cash. That means that cash went up. The business's cash went up by 150,000. And I'm going to get rid of the decimal places so that my numbers will show in the space provided. Let's see, did I do it the wrong way? I'm going to have to make this a little bit bigger to see. Okay, there. Cash goes up and capital goes up. The way you increase capital is with a credit. Make sure the debit equals the credit every single time. And remember, if it takes you a little bit longer or you need more time to think about it, Giselle's going to post these files in that discussion area where you'll have a complete set of files that you can go back and check yours against. And Giselle, if that ever becomes a problem, let me know. But I know you're a quick study there. So, okay, B, paid 8,500. As soon as I see the word paid, I'm going to go over here to the credit side of cash. And I'm going to go credit cash because paid to me is a magic number. It means I need to credit my cash. So that means I got to debit something. Okay, what did I pay for? It was rent expense. It was rent for the month. So I'm going to go over to the expenses. I'm going to go find rent expense down here. And I'll go put that 8,500 in. That was transaction B. The debits have to equal the credits every single time. For every transaction, make sure you have a debit and a credit. So debit rent expense, credit cash for letter B. Okay, let's go see what C said. Bought an auto for $38,500. Okay, so they walked into the car dealer, plunked cash down, and they bought a car. Well, back to the chart of accounts, because I don't know if I should use auto, car, automobile. I'm going to go look at that chart of accounts real quick. Here's my assets. It looks like they use automobile. So that's the asset account I'm looking for. The automobile is going to go up by 38,500. Because we bought a used car, and cash is going to go down by 38,500. So we're just on the asset side. We basically exchanged one asset for another. Oops, I put it in the wrong spot, didn't I? It's not office equipment. It is auto. My bad. It's hard to talk and write at the same time. There we go. And we really should call it automobile because that's what they called it. So I'm debiting the automobile and I'm going to go credit the cash for 38,500. We're making sure that for every transaction, we have a matching debit and credit. That's one of the fundamental rules of accounting. At all times, the left-hand side has to equal the right-hand side of the equation. And at all times, the debits have to equal the credits. There'll never be an exception to that. If you don't do that, then we make a mistake. All right, letter D, perform services for 21,500 in cash. Okay, well, if I'm doing work for cash, my cash is going to be increased. And the way that you increase cash is with a debit. I got to have a credit, right? I have a missing credit. Let's see what's going on. I am performing services. That is the definition of a revenue. And our revenue account here is fees income. And the way you increase revenues is with a credit, $21,500. Make sure your debit equals your credit every single time. Letter E throws students off. Letter E says they paid $1,850 for auto repairs. A lot of people want to go stick that under auto. Okay. The auto account means it has future value. When we bought the car, we stuck it under the automobile account. To maintain the car, to put gas in it, to repair the tires, to do lube jobs, sometimes engine needs to be serviced. That is a cost of doing business. We're going to use this expense account. We would only use the big asset account if we were making a major improvement, like maybe they decided to add a shell to the auto or something. But regular, ordinary maintenance expenses on the auto are going to be run through the automobile expense. So let me debit the automobile expense for $1,850 for transaction E. And because we paid cash, we'll credit cash for $1,850. For every transaction, we just did letter E, make sure you have a debit and a matching credit. We'll do a couple more and then I'll show you how to combine these or foot these accounts. Letter F, we're performing services again, but this time it's on credit. Those trigger words that can be so tricky to students. We're performing the service. That means we're the ones that are owed the money. So we're going to be using accounts receivable for that. So I'm going to go find accounts receivable, and the way I'm going to make that go up is with a debit. And that was letter F. It says performed services on account. I'm not getting cash yet, but GAAP says you record revenues when earned. I've earned the right to receive $12,800, and the credit is going to be to my revenue account called fees income, $12,800. Make sure that you have a matching debit and credit each and every time. Questions on A through F, one that you're still kind of struggling with or one that it didn't quite sound right the first time and you need it repeated again? Okay, let's do a couple more. G, purchased office chairs. There's that word again, on credit. Okay, this time we're going into debt. We're going into Staples or Office Depot, someplace like that, Costco, and we're buying office chairs. Okay, let's go look at our chart of accounts at our assets and see what looks best for that. Office chairs is probably best classified as office furniture. Okay, office equipment is usually computers, monitors, copier equipment. So when we buy chairs, that's probably best classified as office furniture. So I'm going to go to office furniture and increase it for $6,500 because my asset is going up. And how did we pay for that? We paid on account. Let me get letter I up there. It says we bought it on account. That means we just went into debt. And so I'm going to increase my accounts payable by the same amount, $6,500. So again, if you missed that, I debited office furniture and I credited accounts payable because my debt went up. I walked out of the store without physically paying cash for it. So that means my debt went up. I got to pay them. Okay, I want to get down to letter K. So we got a couple more left. I know you're tired. Hang in there because I want to show you how to combine these. Letter H, received 6,500 from credit clients. This is one that kind of threw us for a loop yesterday. Credit clients means they owe that money to you. So what's happening now is your cash is going up. Let me get that part in there because I think that's the easier part. Cash is going to go up with a debit. What has to go down? A lot of people want to put that in revenue. Don't double dip. You would double count the revenue. That revenue was recorded when earned. Now what's happening is the collections taking place. We're receiving that 6,500 from the people that owed us money. So from the accounts receivable just went down because they don't owe it to us anymore. So debit cash, credit accounts receivable. And we're almost done as far as we're going to go anyways. Paid 4,200 to reduce the amount owed. Okay, that's a key word. Amounts that we owe are sitting here in accounts payable. So we're going to make our debt go down because we're making a payment. So I'm going to credit cash because I know cash is going out of my account when I pay that bill. And accounts payable is going down with a debit because I owe them less now. So debit accounts payable, credit cash. Let me stop. See if you have any questions. Okay, we're almost done. Hang in there. Letter J, issued a check. As soon as I see that, I know I'm going to credit cash. So let me take care of that. When you issue a check, your cash goes down. So I got to debit something. What am I paying for? I'm paying for the utility bills. That's going to be some type of an expense. Here's utilities expense. That's where we want to put that 1610. Whoops. Debit expense, credit cash. And then really now I need you to listen on the last one because the last one is where I will get the emails. Okay, we haven't done a compound entry, and I want that word in your vocabulary. Everything that we've done so far has affected two accounts. Well, entries at a minimum affect two accounts, but some entries could affect more than that, and this last one is an example of that. Ken, I know you guys have all done this at some point. You've gone in and you bought something, you put some cash down and you owe the rest. Sometimes Best Buy has you do that. When you go buy a car, you do that. So this last one says purchased equipment for $22,800, paying half now and half later. Okay, well, we haven't done a transaction like that. All of our transactions have affected two accounts. This one is going to affect three accounts. So equipment's going to go up for $22,800. But how did we pay for it? Half. I think I can do that in my head, but I don't trust myself this morning. 22,800 times half is 11,400 of that. We paid cash on, and the rest, the other half, is due in 30 days. Okay, so this one's going to take three accounts. My equipment's going to go up for $22,800. So let me go get that one in there. 22,800. It's going to go up. That was letter K, I believe. Now, how are we paying for it? Two ways. Half of it is coming out of our cash account, 11,400. And the other half, I just went into debt for. What do you do when you go into debt? You increase accounts payable. So that's a special kind of transaction. That's called a compound entry make sure that the debits equal the credits. We had one debit for $22,800 down there in office equipment, and we have two credits here that sum up to that debit. That's a compound entry. So we've recorded transactions going every which way. The last thing I want to show you to wrap up today's lecture is I need to know how much cash I have and all my other balances, but especially cash. I think most of you would agree it's pretty important to know how much cash you have in the bank account. And so I'm going to show you how you foot these T accounts, how you find out the balance of these T accounts. So we call this footing. I'm going to write that on your paper here. We didn't finish this problem. I only did part of it. So we cut the problem off in the interest of time. And we're going to learn how to foot accounts right now. So here's what you do. You add up both sides of the account. So right now, I'm going to go add up the debits. And hopefully you guys have been watching me with Excel so that you can do a sum. Equal sum. Right now, I'm just adding up the debits. So I'm going to put equal sum from the top all the way to the bottom. So there's the sum of my debits. I'm going to do the same thing with my credits. I'm going to sum from the top to the bottom. And then here's the sum of my debits. Here's my credits. You're going to subtract the two, and you're going to put the balance on the side that has the higher amount. This side, the debits are bigger than the credits. I'm going to subtract the two, either on your calculator or in Excel. That's how much cash we have. That's the balance of the cash. We were expecting it to be a debit because all assets have a debit balance. So that's in line with what we were expecting. So the last step of this is, can you go in and foot the accounts? And you should put double underlines beneath it. Sometimes it's hard to see in Excel. They're there. So I'm just going to go over here and put just some double underlines like that. That shows the user that you're done. And you're going to do that with each account. And our last step, I think I'm going to try and show you your first trial balance. The last step is we're going to prove that the debits equal the credits. So let's go down here and foot accounts receivable. We only have one debit and one credit, so we can just go do that very quickly. Take the difference. Goes on the side that has the higher total. It's $6,300. That's how much our customers owe us. Office furniture, that's not hard to foot. It's $6,500. Just to indicate that there's a balance, I'm putting it in red so it's a little bit easier for you guys to see. Office equipment, you'll just put the balance in. Remember, this will be posted. If you're having trouble keeping up, this will be posted. And then we have the balance in our automobile. We're going to do that with each account, and then we're going to prove to the user that the sum of our debits equal our credits. So I just totaled up my assets. Cash is usually the hardest one, so make sure that you got that number, $111,940. Here's the total for the other assets. They're not too bad because there wasn't a whole lot of activity in there. Let me put this auto in red so it shows up. Let's go foot the remaining accounts. Okay, so accounts payable. I'm going to add up both sides just like I showed you earlier on the cash account from the top to the bottom. And from the top to the bottom. And then you take the difference and you put it on the side that has the higher total. And we would expect credit balances on any account on the right-hand side of this accounting equation. We know that the normal balance is a credit for everything on this side except the expenses and that funky contra account, which we didn't use in this one yet. My capital is still 150,000. I'm putting these in red so they stand out. You don't have to put them in red. It's just to help you see them. My revenues, I'm going to add those up, top to bottom. And then we have all these expenses. We'll just go ahead and foot those. 1850, 8500. You guys can probably, if you're writing on a piece of paper, you can probably do it faster than I can. Right now I'm putting the totals in red so they show up better for you. And we'll do our last step. If I show you this last step, you should be able to do 100% of your homework if you wanted to this weekend. So I think that's all the expenses we used up. Go check down there. Yep. All right, so I have everything footed. There's numbers going every which way. We're brand new accounting students, and in accounting, balancing out is really, really important. So the last step, once we've recorded the transactions and we footed the T accounts, our last step is to create this report that's going to show or prove that the sum of the debits equal sum of the credits. So this new document is called a trial balance. And if you're spent and you just can't do anymore, then just watch me and you can always go get Giselle's file once she posts it. But the purpose of this trial balance is to show the equality of debits and credits. And I'm not going to worry about heading it up right now. But here's what you want to do ideally. Every single balance that you just computed is going to be dropped on either the debit side or the credit side. So for example, this cash balance of $111,940, it's a debit balance. We're going to drop it in the debit side. And if you guys are using Excel, you can press the equal sign and just go click on it and press enter, and it will put it in there for you. And on accounts receivable, I got 6,300. So I'm going to drop it into this thing called a trial balance. And the office furniture, I got 6,500. I'm just looking at every account and I'm dropping the total in. My hope is that once we finish this trial balance, that bottom line will prove that my debits equal my credits. Let me go grab the office equipment. And then let me go grab the automobile. There's our assets. We don't total up anything until the very end on this document. So now let me go look at my debt. I'm now to the credit side because everything over on this right-hand side will have a credit balance except for expenses. Let me go to grab my capital balance. And if you get that insignia, it just means you need to widen your column a little bit. He didn't have a drawing yet, so I'm going to skip that. Fees income is still a credit balance. Put that on the wrong line. Let me put that down one more. We didn't have a drawing yet. And then let's go drop in our expenses and then cross our fingers or say a prayer or whatever it is you do. And let's see if we balance this out. There's the auto. Here's the rent. Here's the utilities. Don't think we had salaries or telephone expense. I think that's it. So let's go see. I make mistakes too, so I'm not going to get upset if I don't balance. I just have to go find my mistake. I'm going to sum from the top to the bottom. And I got 198,000 on the debit side. And I got 198,000 on the credit side. I've just proved that my debits equal my credits. Make those bigger so you can see them. And once you've done that, The next step, which we already know how to do, the next step would be to do the financial statements. And we learned how to do that in chapter 2. That'll be what we do on the second day of this chapter. But that was a loaded day of lots of new information. So to kind of bring it all back together, what did we talk about today? We talked about T accounts and 5 rules for debits and credits. We know that debit just means left and credit just means right. We learned that there's 5 types of accounts that you see up at the top. And we learned that each one of those accounts have a rule. On the asset side, the rule is plus minus. Everything else to the right-hand side of this equation is the opposite, minus plus, minus plus, minus plus, until you get to the expenses, which are plus minus. And then someone asked a really good question. We have that one account that throws us for a loop, that contra equity account that means contrary to the normal balance. That one has the opposite of a regular equity account. So we didn't use the drawing because we didn't finish the problem, but drawing throws people for a loop because it has that contra account effect or opposite.